is looking better. Tarun Kataria of Religare Capital joins in to talk about what has been a volatile session for us, and we've been down in the dumps for a while now. Tarun, hi, afternoon. What have you made of the turmoil that we've seen? Hi, and do you think that this is a good time to buy into the markets despite all of the despondency?
I think I would still be quite cautious. I think there's still, sort of enough uncertainty around not only the global system, but around what's happening or indeed not happening in India. The market is, let's say, below fair value. So yes, long-term a buying opportunity, but in the near term, could you see another downdraft, 8, 10, 12%? The answer is absolutely. But I think the point in all of this is if you believe the sort of the 5-10-year India story, which I think most people do, it's a great time to be nibbling in, but, are you going to see a massive sort of run up in this market near term? The answer is probably not.
Okay, those are the profitability figures, or the revenue figures rather, for Diwan Housing coming in as well for Q4, 721 crores versus 430 crores, so that's a 67% jump on a year-on-year basis, and 94 crores versus 58 crores on the bottom line as well. Tarun, hi, good to see you, and just wanted your view with regards to the earnings and what you've made of the fabric of the earnings that we've seen till now.
I think earnings generally, have held up reasonably well, but they will be under pressure, and I think you'll see that certainly for the next couple of quarters. Really, with the economy having slowed down, cost of input costs still remaining high, interest rates still remaining high, you have at least another couple of quarters of earnings being under pressure. So we'll just have to sort of watch that over the next 6 months or so.
So where would you allocate your money if you were interested to buy in a market like this? What kind of sectors would reap you benefits if you had a 6 months to a year time horizon?
I think generally defensive is the place to be. As I said, there's really no catalyst to take this thing higher and fast. So the sectors that we've been talking to clients about are generally pharma or IT. I think those are two sectors that make sense. Consumer a little bit expensive, obviously, but I think consumer spending still continues to be quite robust. So I would be in those sectors as well. It's the industrials that remain under pressure. So we'd be somewhat cautious there. Banks, banks after the January-February run-up have had a 10-15% downdraft. Now there's probably still some pressure there, but again, if you believe long-term, you need to play India, then the banking stocks are a great way to play it.
So what would you pick in banking? Because the market has been very intelligent in, sort of sifting the wheat from the chaff. If you look at it today, PSU banks are down and out while private banks are up on top. Would you still buy private banks despite the valuation, the lack of valuation headroom?
Yeah, I think there's sort of concern about generally what the book of the PSU banks look like, and people don't necessarily have full clarity on that. So I think the private sector banks still make sense, but again, this is not a market to be looking at 1 or 2 month horizons. This is a market now to be picking 10 or 15 core portfolio stocks that you're going to ride with for the next 3 to 5 years, because timing this market, timing the mood of FIs, the sentiment of FIs, what's not happening or happening in Delhi, all of these things create so much beta in stocks and volatility in stocks that timing becomes an issue. So at least what we're doing advising our clients is, if you really want to play India, play the secular story, play the consumption story, play the financial services story, but be there for the long haul. You will have stress along the way, but fundamentally, these are the sectors to play.
All right, for the rupee, actually, we should pull that one up for you. It's inched back to 53.51. Remember that we had closed at 53.82, and we had reversed in terms of a depreciating trend post all the measures that had come out from the RBI. But it seems like that pressure is back on the rupee, not as much as what we had seen in terms of a closing yesterday, but still that depreciating trend continues. Sentiment seems to be negative on the currency still. For the equity markets, 49.70 currently for the Nifty. Time for a break, but while we do that, let's get some more perspective this time from Ramdev Agarwal of Motilal Oswal Securities, where he says the rupee is a key trigger and that the RBI directive to exporters could help stabilizing the currency.
Even if the company is benefited, I mean, something is export oriented or something is their products are cost structure is rupee denominated, but the selling price is dollar denominated. So there is a clear benefit to the company. But markets are not in the mood to reprice those stocks in a hurry, because you need buyers, courageous buyer to come into the market. And today foreigners are the ones, and they seem to be very badly hurt last year by 15-20% of currency decline.
Do you expect the weakness to continue, or can you think of any reasons to be bullish now?
I think the weakness is very clearly there in the market, and there is no reason for any kind of optimism at this juncture, but I mean, that's the nature of the beast right now.
Ramdev, how do you, technicals aside and global cues aside, how do you see local fundamentals pan out over the next 2 or 3 quarters? Do you think there will be any support from either earnings or macro numbers out here in our own economy?
See, as far as the earnings are concerned, this quarter is again likely to be flat. So we are not going to get a lot of support, at least for next 2-3 quarters from the earnings side. At least there is no visibility that there is going to be a major change in the corporate earnings. But what can change is what drives the earnings. That is, one is the interest rate. Second is your say oil prices, which seems to be kind of giving some kind of a hope that it can be pretty weak. Another $10, and I think the whole outlook for oil, inflation, and those kind of things can change. Global commodity prices are weak, but I think the real spoil sport right now is the currency movements.
Ramdev, what do you make of this intervention from the Reserve Bank? Do you think it will be successful in checking the rupee and keeping it beyond or below that 54 mark sustainably?
Now it is clear that they are concerned. Authorities are concerned about the drift in the rupee, prolonged drift in the rupee, and so I think it will hold for some time. But I think the basic problem is that we have triple deficit, and this time that balance of payment deficit. I think we need to see conditions created wherein the foreigners become a little more confident about investing in India, whether it is FDI or whether FII. And that, unless that changes, my sense is that we don't have any lasting solution. So whether there will be any action in Delhi in terms of policy reforms or changes in the oil prices and the current stalemate, whether that changes or not. So it's a much bigger question. I don't think this is sufficient to kind of hold the rupee at this level.
How do you see exporting companies dealing with this new rule from the Reserve Bank, Ramdev? The fact that they've got to convert 50% of their forex earnings, it will curtail their flexibility to a certain extent. It may be fair on the part of the Reserve Bank, but do you see any problems cropping up because for any of these large exporters?
Yeah, I mean, clearly if they have taken a stand that they have hedged the entire position in the forward, particularly IT companies, or even Bajaj Autos of the world. I mean, I think this sudden change might mean some kind of a reversal of what position they have created in the marketplace. But if this law remains stable, then probably it might be a better way to manage the forex in the future than the way most of the corporates are doing. So I don't think it is going to be much of a problem for the corporates to unwind whatever stand they have taken.
Welcome back. Just about 8 minutes to go before we close for trade, and the only word you can use for today is volatile. So we will close flat, down just about 8 odd points, but what we've actually done is come off 80 points from the highs of trade, and we'll close another day below that 5,000 mark. In fact, closer to the 49.60 odd level. On the rupee as well, 53.85 was the close yesterday, and today we're not too far away from that. So 353 now, and getting weaker as we speak. So that's another monitorable. In terms of sectors, it's public sector, banks, metals and autos that are on the weak side, while on the upside you have something like Ken that is the biggest gainer today. Mr. Tulsian, there is a cabinet meeting that will be held evening, and again there is hope of some divestment news coming out. Is there anything in the hopefuls that you would want to bet on, or is this a space that just has no scope at all from here?
Sonia, I don't see any scope in any of the companies, because if you take line by line, suppose I don't think that ONGC could be there. Oil India again will not be able to satisfy even the quantum, from that point of view. If you take a BHEL, again the Praful Patel, earlier had the valuations, and thereafter it has in fact seen a further fall. Then next is the Steel Authority. The kind of valuations now it is commanding at a mark close to about 45,000 crore, again is I think very pathetic. So I'm unable to understand, why the government is not taking off shading their stake further by about 10% in Coal India, though that is not on the agenda. Not even heard anything about that government is seriously thinking of divesting 10% in Coal India. It's the only company, where I think that the respectable amount can get mobilized by the government, to the extent of about 22 to 25,000 crore. And apart from that, honestly, I don't see any company, whether you are, in addition to the 3-4 companies which I have stated, if you really want to add the name like maybe Navili Lignite or maybe the NTPC or maybe Hindustan Copper and all sort of things. So all for the time being, in my view, the divestment is ruled out.
Tarun, your view on the rupee and the measures that were announced by the RBI today?
I think the measures obviously help, but as you've seen in the market today, it's sort of it's a intraday reaction for the thing to to strengthen by a point and a half. I think the bias clearly is to remain extremely weak. Flows into India are very light, and usually it's the FI flows that support the currency, that support the equity markets. And I think with that sort of dissipating after a good run in January, the pressure is to continue to weaken. The deficit numbers look terrible. Obviously the current account deficit also, both trade and current look pretty weak. And there's nothing, again, that's going to sort of change that. So I think the bias remains on the weak side. If we continue to see what we're seeing, or indeed not seeing in Delhi, I think the bias to get, 55 is a no-brainer, 57 is probably a no-brainer. Are we staring at 60 in the next 3 to 6 months? That's the question to ask, and that's what corporate India, I think, is thinking about these days.
Thinking and hoping that it doesn't happen, Tarun. 57 is not something that we'd like to see anytime soon. But Sudarshan, two stocks that are on their way to become penny stocks now: Suzlon, that's back at the 19 rupee mark, and Manappuram General Finance, that's now a 20 rupee stock. Any potential there in shorting further, or is it done?
No, Manappuram we cannot short. It's not in the F&O list. Okay. We have talked about Manappuram many times, and I have explained every time I was asked, should we buy now? I said, please don't touch it. That's the only thing we can do with that one, that don't get into it. Even now, it's not worth buying. Suzlon is a disappointment because I was very upbeat on the stock, and when it rallied towards 30, I thought maybe this is it. But clearly, the market has its own wisdom. I am not able to suggest a short in Suzlon. There are many other opportunities elsewhere. So maybe Suzlon can simply be left aside till it decides to build a base.
Right, the Escorts numbers have come out, so we'll just take those numbers for you. The operating income, the net profit has come in, by the way, at 18 crores for Escorts, while we were estimating, not us actually, a couple of brokerages were estimating about 3 crores or so, and there was one brokerage that estimated about 11.5 crores, but at 18 crores, it's higher than what the street was estimating. The EBITDA has come in at 43.8 crores versus an expectation of 25 crores. So even on the EBITDA line, Escorts numbers are better than estimated, and that's why you're seeing a sharp reaction on the upside to the stock. The operating income has come in at 795 crores. So the EBITDA on a sequential basis has gone up quite a bit, up about 65%, coming in at 43.8 crores, and net profit as well has been boosted because of that. Last quarter, they did about 11 crores in terms of net profit, and this time they've done 18 crores. So looks good, but let's wait by for more details on whether there is anything else. Okay, just 2 minutes to close, so we should just wind up trade for you, and then we'll get back to talking to our guests. It's flat for the index, so it'll be a close below 5,000 again for a third day in a row. And although the index is flat, it's a disappointing day because we came off from the high point quite a bit. So 80 points off from the highs of about 53.40, and for the mid-cap index as well, just about a tad bit choppy. In terms of the losers, the volumes, by the way, have gone up to about close to 1.5 lakh crores, 1.43 lakh crores in terms of turnover because of the volatility that we saw. And in terms of individual stocks, it was your banking names, specifically your public sector banks, that bore the big brunt today. So PNB, SBI, down almost about 2% or so. Metals took a bit of a beating today. So JSPL, Sales, Sterlite and Hindalco all down about 1%. And autos were down as well. So Maruti Suzuki goes home with a 3% cut, and something like Hero MotoCorp, Tata Motors, Bajaj Auto, all of them in the red. So these are the three pockets that really saw pressure this afternoon, along with some other heavyweights like Coal India that were down about 1.5%. On the upside, Cairn was the biggest gainer today. So 4% up move on Cairn. Oil marketing companies saw some more trading fervor. So 2.5% up move on BPCL. And from the private banking space, there was some pickup. So you saw perhaps some buying at lower levels. Kotak Mahindra Bank, HDFC Bank, your entire lot went home in the green. BHEL too saw some buying action, up about 1.2%, and ONGC was up almost about 0.7%. Some more of momentum on the upside for IT names. So TCS and HCL Tech, maybe with the weakening of the rupee, there is some traction in IT. So this space as well went home. But all in all, you can say it's disappointing. We closed below 5,000 for a third day in a row, and the market breadth too was not that great today.
Well, the mid-cap index actually didn't do too badly as compared to the Nifty and the Sensex. So the mid-cap index outperformed in terms of a close, so up around 0.18% for the mid-cap index today. Advanced decline ratio at 1:1 in today's trade. Just to put things into perspective, it was a lot of volatility within the broader markets as well in today's trade, and of stock-specific reaction that we were working with. Again, in terms of two sectors which stood out, it was the entire infra basket which completely stood out, as well as the entire banking space which completely showed dividends. So from the infra basket, it was GVK Power and Infra which lost around 7% post its numbers yesterday, and a possibility on equity dilution as well. IVRCL2 from the entire lot was down around 3 or 4. Hindustan Door, Oliver, GMR Infra, all of these stocks were pretty weak today. From the banking space, it was Andhra Bank, Union Bank, DCB which lost out quite significantly, but on the upside was something like Yes Bank, Allahabad, ING, IndusInd Bank. All of these actually saw some amount of momentum on the upside. A lot of results reactions in today's trade. Jubilant Foodworks post a number, saw some amount of profit booking, so that one goes home with losses of around 1.8%. Divan Housing, which came out with numbers which were pretty much okay in terms, but that one loses, so that one's down around 4.6%. Apollo Tires again lost out post its numbers on interest cost worries as well, down around 3%. Lupin, where the profitability was marred this time, that too lost out in today's trade. Canara Bank had done a good reaction and a positive note to its numbers, so that one is up around 5%. The company did see, or the bank did see, some amount of asset quality improvement on a sequential basis. Cadila Healthcare, two golds, along with Glenmark Pharma from the pharma space. Two other stocks which actually stood out were Hexaware, which were from the broader, which was up around 3%, and the other one was KPIT Cummins, which has just about defied gravity, came out with numbers and strong guidance. So KPIT Cummins goes home with around 8%. Escorts too, its numbers, it will be good to see how they closed up, considering that the profitability came above estimates, but at around 18 crores sequential basis rather. So Escorts, however, still weak, down around 2.5%. But all in all, it was a day for the broader markets, and there was a flat close for the Nifty at around 49.65. Tarun, just wanted on the macros, because you mentioned the trade deficit numbers briefly. Tomorrow we have the IIP numbers. Do you have a view what we can expect in terms of the macros going forward, especially possibly the IIP tomorrow, where there is a possibility that will come in at a contraction?
I think it's entirely possible. I think, as you know, there's been really over the last 12 to 24 months. So I think the pressure, macro pressure, continues to be on the downside. I don't think anything's changed over the last few months, whether it's capex spend, IIP. Inflation obviously has come off a little, not, I think, structurally where we'd like to see it. So I think the pressure on GDP growth generally, IIP leading up to GDP, remains pretty soft.
Sudarshan, from the infrastructure space, seen the deepest gashes today in the broader market, which are a couple of stocks that you would recommend as shorting candidates now?
Now, I've been speaking about GMR Infra. That stock is giving suggestions of coming into single digits. That will actually come about, but that's a short selling idea which I'm catching and which I think should work out. Other is IVRCL. IVRCL is now completely collapsed. The rally that we saw on the news and everything is over. The stock is breaking support levels repeatedly and is heading lower. And there are some other that have fallen so much that it's not practically justified going short in them.
Mr. Tulsian, an opportunity to look at Lupin's numbers briefly and whether what you made of that?
I've seen those results, being flannel only just now, but I think the things are looking quite negative. In fact, if you see the PAT of 152 crore, you add that 46 crore for inventory transfer, because obviously the inventory transfer to the overseas subsidiary will not have any effect line, but the transfer pricing or the income tax laws must have attracted an income tax of 46 crore. Even if you add that, I think the things get negative, and more especially when you have a PAT of about 925 crore for the year, while the Q4 contributing to the extent of about 29 to 30% of the turnover. So definitely this scenario looks bad, that the company has seen the pressure on its margin and all that. Yeah.
Yep, for Lupin, even the margin percent have been a disappointment this time around. So the stock goes home with a loss of about 4% plus, including the Apollo Tyres, Diwan Housing, all of them have been disappointments this time around. But good set of numbers coming in from like Jubilant and Canara Bank. We'll take a break on that note, flat for the index, but when we come back, we will talk more markets. We thank all our guests, of course, for joining us and taking us through the last 1 hour of what has been a volatile day for the market. Take a break.
Hi, welcome back to NSE Closing Bell. The weakness in the market still continues. Another sub 5,000 closing, 49.65 for the Nifty, and towards late trade after the European openings when we saw that big sell-off, closing off of the lows. But let's get in some opinion. Here are some hits from this earnings season. Here are Amisha Vora of Prabhudas Leeladhar.
They reported a slightly higher loss, but I think what really disappointed is a huge on interest. And apart from that, the size of loss in their power business, of course, the problems in terms of availability of gas was very well known, but the loss on a quarterly basis could be so high, came as a little disappointment. I think Union Bank has come out with pretty outstanding numbers. Also partially because in the last 3 to 4 quarters, they had taken a lot of hit on asset quality for system-based, as well as on some of the accounts going bad, but particularly for fourth quarter, compared to last 3 quarters, average net profit of 300 to 350 crores. This quarter, they reported something like 773 crores of net profit. There is no major tax or exceptional item into it. The gross addition to the NPS have been also very moderate. Asian Paints has delivered outstanding numbers, be it in terms of volume growth, 15%, be it in terms of EBITDA growth, 32%, be it in terms of PAT growth, 40%. I think when you look at the Asian Paints number, you feel that probably they are operating in some other country, not India. And because everywhere we see IIP slowdown, GDP slowdown, inflation, and all other worries, but more in their numbers, that is being reflected. No doubt, the stock year till date has outperformed index almost 32% or so, but the going seems to be continuing to be good, and the results were also beyond what markets were expecting. So I think the set of numbers that they have done superb.
Welcome back. You're still watching NSE Closing Bell on CNBC TV18. A volatile day for our markets, but the trip up that you saw post-noon was courtesy the weakness that we got from across the globe. Even as the French index is down 1%, and there's been intense pressure on that particular market for a while now. In terms of markets, Lupin is one stock that should be up for you on your screen, down 4%, post disappointing numbers operationally. Joining us now, Sharma, the Managing Director of Lupin. Ms. Sharma, thanks so much for joining us. Could you take us through this quarter's performance and in specific your US market and how it's been?
I would only say that, we don't generally share product-wise numbers, but suffice it to say that our overall growth in generic business has been about of the order of 19%, and Geodon has obviously contributed handsomely and would continue to contribute likewise in the coming quarters. But at this juncture, for competitive reasons, you would appreciate I can't share the numbers.
Of course. Could you elaborate more on how the branded formulation segment has done, the likes of Antara and Suprex?
Yeah. So overall, the brand business has grown 8.5%. The tablet grew 31%, and suspension has also grown handsomely, despite being in that product group for last almost 6 years. Antara, fibrate market as such, if you see, degrew by about 18%. Our degrew by about 6%. But having said that, the prescriptions of Antara grew by about 3%. And to me, that's a positive mark, because while the market is degrowing, and there's a lot of confusion in fibrates, but notwithstanding that, I think Antara has still performed relatively better. I'm not saying it's a great performance. We could do better. So in terms of overall brand, we've always said that about 30% of our revenue from US would be in branded formulations, and that's what we've been maintaining. Soup is obviously maturing, and whatever I'm sharing with you just now is in that the flu season was very weak this year. You know that America saw no winter this year, actually. So that be the case, I think overall I would say the brand has done well, but we need to infuse more products into the portfolio. We have now a very strong sales force to really leverage the entire strength in goodness. So, and that's where the focus is at the moment.
And Mr. Chairman, your margin performance for the company this time around, and what's a sustainable level for FY13?
We should improve them. These, I don't think, the fact is that the thing about is the growth over previous time. But if you see in terms of our growth of PBT, it has been 20%. So that's a good number. I've always maintained that in the growth phase of the company, while we are attempting to grow EBITDA percentage, which has been around 21%, it would take extra effort, in my opinion, and the team is quite glued onto it to actually increase our EBITDA in the future. So rest will all fall in place if you see. Once the EBITDA margin goes up, PBT line, and of course we have entered a high tax regime that, as you can see, but nothing to do with Lupin. I think that's a general lay of the land, because EOU benefits have ceased to be there. They were there till 31st March last year. And therefore, some of the major manufacturing out of Goa and is now taxed at full rate. And although we have a SEZ, that has not fully been operationalized yet. So that benefit is not coming in full measure. And as you know, in the initial startup, the cost structures will always be higher than the benefit part of it. But again, we are working in the right direction, because we are setting up 2 new plants, and both is at area. Although a formulation plant being in SEZ in Mihan is a lot more valuable, because major profits come out of formulation business.
Mr. Sharma, can you take us through some sort of guidance or numbers for the coming years in terms of growth?
No, I think that'll be very difficult for me, because I think Lupin has been that we don't do inorganic strokes on purpose. I think these have the ones which have strong strategic fit with the business. We do, and we spoke a lot about forays into DPC hospitals, and that being a major lever for growth in Japan. And obviously, before we acquire, we have looked at a few other options. And there's no point talking about those. It's a very delicate issue, because for the seller and also for the buyer. And it raises antennas for the competition, So it'll be not fair for me to that, but I can only assure you that we've had a very strong track record in the company of creation of value and capturing of value, and I think that will continue unabated.
All right, Dr. Sharma, thanks so much for joining in and all the best for the next financial year. That's the word coming in from Lupin percent post some margin disappointment that came in this time around. We'll take a break. When we come back, it'll be the last segment on the show. So we'll our participants and tell you how they fared for the day. Follow on our website. This is how you do it. Just log on to bullseye.moneycontrol.com and their portfolios will pop up for you. Join us on Power Breakfast every morning at 7:30 a.m. to find out what our contestants have been picking up and what the prices that they have set out for today. On that note, we'll wind up with this edition of NSE Closing Bell after the bell takes it forward.